Hello, my name is Russell Myers. Welcome to Issues Unite. So the Fed dropped, the Dow dropped again yesterday, and a total of 2,353 points from the previous day. So that brings the total decline in 3 weeks to 8,000 points. And this is basically a 30% market decline in that time frame. And it was also the most severe one-day drop the market has seen since 1987. And on that day, it was dubbed Black Monday by the investors of the time. Now, there had already been a market decline on Thursday morning. Before official trading had begun. And that decline before the market even opened was down 1,000 points. It appeared to me that trading started later than normal. Either that or the typical resources I use were not showing open market results, and that was as late as 8:30 my time, 9:30 Eastern Standard Time. The market is supposed to open at 8 a.m. Eastern Standard Time. And then the market was eventually suspended for the second time this week, when the decline reached 7%, total, setting off the first of the three triggers I mentioned in an earlier video. Now, this decline is even on Thursday is even more significant because the Federal Reserve had pumped $500 billion into the repo market in what appeared to be a lump sum, which halted the decline for only a few minutes. And then the decline just continued on and got far worse during the last 30 minutes of trading on Thursday. And the Federal Reserve is stating that they are going to pump a total of $1.5 trillion into the market in less than 1 month's time. That's not 1.5 million, not 1.5 billion, 1.5 trillion with a T. And this has turned into nothing but an ATM for the rich. The Federal Reserve deposits the money, the rich investors withdraw the money. And who winds up paying this bill in the long term? You really have to ask? You do. And so when they sell off, they start selling off all their stocks. They pump up the value of the stocks incrementally again to squeeze the last few pennies out, and then they sell their stocks to walk away with more money. And so they're making profits on each side of this. You don't get anything out of it. They're not. This is not creating jobs. This is not creating wealth for the general population. The wages are not going up, and you can expect that mass layoffs are about to follow. All right? So all of this money that the Fed is pumping in just illustrates clearly that the Fed has no control over whether the market is going to continue to decline. It's not possible when the market represents trillions on trillions of dollars. Even though the Fed has announced open market operations to directly purchase hundreds of billions in treasury bonds to attempt to rescue the failing yield curve on federal bonds. That has no direct benefit to the stock market. It has an indirect effect, but with the markets falling, well, it's how much good this does is highly, highly debatable. So while I was actually making my notes for this at 5:48 this morning, the pre-market trading was showing an increase over Thursday, an increase of about 700 points. Now, if that holds, that's still only regaining 1/3 of the losses from just one day, just from yesterday. You know, it would have to go up more than 3 times as much to regain what was lost in one day. Now, something I've neglected to mention up until this point is that right now, retail is actually up. Between tax season, the change of seasons from winter to spring, and people stocking up just out of fear of store shelves emptying out, retail sales in some areas, groceries and household needs, is doing rather well. I'm not expecting that trend to continue beyond late April or early May as tax season winds down and the very last of the tax refunds are issued and spent. By that time, a lot of store shelves are likely to be bare, empty. Now, even if the grocery shelves are not bare, we can expect to see a drastic deceleration of spending as the coronavirus spreads and more people place themselves in seclusion to avoid contact with the virus. You know, most agricultural products imported to the U.S. come from South America and other sources, not from China. You know, so that the food supply chain is not going to be badly disrupted. You know, and in fact, there could be an oversupply of some grocery items because of lowered exports to China from the countries that we're importing from. Because if they're not, because those countries export to China and to us, you know, but if they're not exporting to China, then it can cause an overage of some grocery items, you know, agricultural items. You know, the grocery shortages that we're seeing are driven entirely by emotions, nothing else. It's just people being afraid, you know, and the more afraid they are, the more they're justifying their own fear. Excuse me. All right. Some things, spring clothing and some supplies, gardening supplies and different and stuff like that, are likely to see a reduction in sales over last year, you know, simply because of the percentage of products in those areas that do come from China, which are not going to be available. If they're not exporting, we're not importing. You know, if that's our major source, you can just count on it. You hope you kept your spring wardrobe and your gardening supplies from last year. And there's something else that I've got to mention. All right, there are a lot of people that I know that have been pushing MMT for some time now. Now, let me point out that all the stuff that is happening right now is this is an illustration of MMT in action. This is MMT. All right? Proponents of MMT are fond of claiming how we can basically print our way out of debt. But the Fed has had their printing machine running on turbo for months now. And this is the end result. The continued creation of more currency is eventually going to be one factor in hyperinflation that we can expect to see at some point. Creating more currency just devalues that currency. The sheer volume of currency in circulation makes no determination at all as to the equity of wealth. It's where that currency circulates to that determines wealth equality. As long as our country continues creating more currency with this ATM system here, as long as we're still creating more currency that is only available to the people who hoard the majority of the wealth, the problem is going to continue worse. The fact is, our economy could easily function with a lot less currency in circulation if we distributed that currency in a more equitable manner. So please, just stop promoting MMT. It's useless, it's naive, it is not anything that is going to fix any of our problems. The only way that we are going to fix our problems is by addressing them head on, not by changing how we account for money or how we create money or by creating more money. No, that's not the way that we'll fix anything. You keep creating more money, and all you're going to do is make it so that people require more money, and while wages are stagnant, you keep printing more and you keep increasing prices. All you're doing is driving people further into debt. So I've talked about MMT for years now, and it is complete waste of oxygen. So, all right, that's going to be it for today. I'll be watching what's going on and off when I'm not asleep. And so I hope you have a good day. If you can see your way clear, please donate $1 a month to help me continue and expand this. I'll be continuing even if I don't have any money going in. But I would love to be able to spend more time and research and, get this going even further and bring in guests and interviews and things like that. So anyway, have a good day. I'm putting the link to my PayPal account below, and visit issuesunite.com. And please click like and subscribe to this channel.